Is the rally really over for gold, or are we just refueling the rocket for the next leg up? Now, the prospect of a Federal Reserve rate cut in September is becoming increasingly likely, but has that cut already been priced in today's gold spot price? That's something I'd like to discuss with you, as last week's gold market activity was a little crazy. So let's talk about where the price of gold may be headed, coming right up. We saw the price of gold reach a new 2-week low on Thursday of last week, and also silver dropped nearly 5% as the market opened. As a regular buyer and seller of gold and silver, I do spend a few hours each week in a coin shop, and while you're in the coin shop, obviously you get to monitor people coming in and out and what they're doing, whether they're buying, whether they're selling. And based on my observations, and it's been this way for a while now, there are a lot more sellers than there are buyers. Now, that's not to say that there aren't buyers. There's actually quite a few big buyers out there. But when we see things like the price hitting an all-time high, as we did not too long ago, profit taking or cashing out does become more likely. And I've witnessed this in the coin shop, and I'm reading similar comments on my videos and some of the other stacking channels. Now, big sellers are coming into the shop, and it does happen pretty frequently. I'm just not seeing as many big buyers as I was before. But why are gold holders selling? Why are stackers selling? The answer is it's probably not even that many stackers selling. It's more on Wall Street. Now, with the state of economy being what it is and the upcoming election, to me, it's puzzling. To most stackers, it's puzzling to see folks selling their gold and silver now. I don't see the economy improving really a whole lot, at least not anytime soon, maybe in a year or so. I just don't think that the government's going to address our nation's many financial issues. I think there's a lot of positive talk about doing so. It's just, you got to be a realist, right? You got to realize that politicians need to get elected. Obviously, some are better than others, but I just see more of the same coming. And regardless of who's in office, I'm still accumulating gold and silver, but I'm just one guy, and there's a lot of big investors out there that can actually move the market. So speaking of those big investors and market makers, they've been accumulating gold with us stackers on Wall Street. However, because of the tech stock beatdown that took place last week, we saw some pretty big losses in Apple, Nvidia, and even some of the meme stocks. They weren't making anybody any money. And when that happens, and gold is at a near all-time high or hits an all-time high, you can almost bet that you're going to see a bit of a sell-off as big investors start turning their gold into cash. And that's because they're looking for the next opportunity in the stock market. A lot of times the stock market does recover pretty quickly, and it's a great wealth generation tool, especially if you know what you're doing. Now, September is the target month for the U.S. Central Bank to make its next rate cut, and with political implications favoring a cut, even if the data doesn't support it, it's all but certain to happen, okay? But my question is, has it already been factored into gold's price today? Because rate cuts are typically bullish indicators for gold. I mean, just think about it. Gold is beautiful, and we see its many advantages as stackers. However, it doesn't pay a dividend, and you have to solely rely on its value to increase and outpace inflation. And it does do that, but doesn't always do that. So that leads me to believe that the rate cut may already be factored into today's price, today's gold price, that is, because it just doesn't make sense to see rates coming down and then gold getting beat down at the same time, unless it's just profit takers on Wall Street, which, I talked about already and could just be the case. Now, last month, there was also a decline in gold imports going into Hong Kong, indicating a potential, slowdown in some Chinese demand. I still think it's pretty strong. Also, central bank buying has slowed down lately, creating just more opportunities for us smaller stackers to dollar cost average on any pullback in price, which, as you know, presents an opportunity to buy more gold at a better price than maybe you could have gotten it the week before, which who doesn't want to get a good deal, right? Who doesn't want to make a transaction and walk away thinking, hey, man, I got a good price? And you hear it on YouTube all the time to buy the dip, but I also talk about the fact that a lot of people who watch my channel, silver stackers, gold stackers, we're having a hard time continuing to stack like we were before because of the cost of living that we're all experiencing, namely over the last 3 years. I'm living proof of that. My income has risen, but I've had to work twice as hard. I've got a couple of side hustles going just to maintain my quality of life, and I'm sure you guys are seeing the same. But when it comes to gold, back on the topic of gold, I do see the price stabilizing as buyers come back to the market. Anytime there's a sell-off, I mean, when you look at gold, nothing's changed. Nothing has changed. Nothing has changed with politics. Nothing has changed with the economy. The banking sector is still a mess. Nothing has really changed other than tech stocks suffered a pretty big blow. Big investors holding paper gold decided to dump, and that creates a potential buying opportunity for the rest of us. All right, now, each week, I like to save some cash and stick it away for gold, okay? I also do the same for silver. It's called stacking, and if you're new to this channel and you're not one of my regular viewers, that's what I'm talking about here. You're converting your dollars or your yen or your euro, depending on wherever you're at. We've got viewers from all over the world into tangible precious metals, within a budget you can afford, on a time frame you can afford, and just sticking to it over a period of time. I suggest years. Give yourself a decade of stacking, buying every 2 weeks, every month, whatever fits your budget, whatever fits your schedule, and just look what you will have been able to do. You will be in such a good position 10 years down the road than you otherwise would have been. Just take it from me and many other stackers in the community. So that's what I like to do. I'm the Florida Stacker. I really appreciate you guys listening to my thoughts on gold, but the remainder of today's video is sponsored content, sponsored by Alaska Energy Metals. And Alaska Energy Metals is a small cap nickel exploration and development company that is based out of Alaska here in the United States of America. Now, I do a lot of mining stocks, mostly in Canada, so it is pretty interesting when we get one here in the United States. What I find to also be very interesting about nickel mining in general, if not a little scary, is the fact that nickel mining in the United States takes place at only one mine. That's right, there's just one mine in existence, fully operational today, and it's up in northern Michigan, and that mine is scheduled to close in 2026 and is producing low-grade nickel. This is why nickel is worth a look today, in my opinion, as when you look at the demand in the future going forward, there simply isn't enough domestic supply given demand requirements, and the world is not ready to meet that demand either. So even if all the free trade countries sent us all the nickel that they mined, it just wouldn't be enough going forward. So the United States currently imports today, not even looking forward, 99% of its required nickel for industry. And for decades, the U.S. could do this safely and rely on those trade agreements for imports of essential battery metals like nickel. A changing world, however, is upon us, and changing worlds require adjustments to policy. The Russian invasion of Ukraine is probably the best example of what I mean by a changing world. Many European countries, I'm sure you've watched the news and heard, were reliant on Russian energy and even remain reliant on Russian energy today. Obviously, countries like the United States and our European allies bought energy from Russia. We bought nickel production from Russia. And this reliance really proved to be a political handicap when it came to trying to stem Russian military aggression, right? You want to tell somebody to stop doing something and use whatever powers you have as a country to do so without going to war. Unfortunately, when you're reliant on the aggressive country, what are you going to do? So lessons learned. Hopefully, voters will take that into account too this November and in other countries. Now, the current lack of domestic production here in the United States of nickel and other essential metals is well known. We import a lot of uranium as another example. And these are the reasons that auto manufacturers, in particular here in the United States, like GM, have moved to secure their own battery metal supply chains. COVID taught us a lot. The Russian invasion of Ukraine has taught us a lot, right? So you don't want to get caught in a situation where you're reacting. You need to have a plan. And a critical battery metal shortage can not only cripple the auto industry, it could also, really damage additional industries here in the United States and elsewhere. Nickel is a crucial material for battery production. It does account for an average of 16% or so of an EV battery. And when considering the supply chain risk of a critical metal like nickel, it does rank up there very similarly to lithium. You can see that here on this chart, both critical and in demand. Now, currently, China and Indonesia control the majority of global nickel supply, and neither of those countries really has the best relations with the United States right now. Furthermore, only 10% of all nickel that is produced or mined each year comes from our NATO allies, and that's simply not going to be enough to meet the over 20 times increased demand that is forecast just over the next decade here in the United States. Really, when it comes down to it, the United States cannot solely rely on NATO allies, really can't rely on itself right now. It needs to do a lot to shore up its own domestic production and strengthen trade with countries like Canada that are also doing the same. Now, Alaska Energy Metals, like many exploration companies, focuses on drilling as its principal strategy for increasing value Share price should increase as the deposit is expanded by exploratory drilling that is coming up actually very soon. We'll talk about that. The Nikolai project in Alaska offers a domestic source not only of nickel, but also of cobalt, copper, iron, platinum, as well as palladium. We like those metals. Nikolai is situated in a favorable area for mining with paved roads, rail, and access to a deep water port, as you would expect in the United States. Now, the surrounding area has mining claims that are held by some other interesting companies. One company is called Cobalt Metals, okay? And Cobalt Metals uses AI systems to locate valuable energy metals such as nickel and has a prominent billionaire investor class such as Bill Gates and Jeff Bezos, to name just a few. Now, the indicated resources across the Eureka zone of the Nikolai project are quite significant, with 3.8 billion pounds of nickel, 1.2 billion pounds of copper, and 300 million pounds of cobalt. Alaska Energy Metals' 2024 capital plan entails a 2 million Canadian dollar investment. This will fund that additional drilling that I was talking about to complete 2 holes down to 1,000 meters. That's going to add inferred tonnage to Nikolai's profile along the southeastern corridor of the project, and this successful drilling will enable the company's leadership to conduct an updated resource calculation estimate, which will provide an update on the company's value, right? More metals in the ground, we've got them, we know they're there. That's going to deliver results as well as results to its shareholders. Okay, so one of the few nickel projects in the United States, Alaska Energy Metals, its continued success with this project could increase the likelihood also of an acquisition bid. As mentioned, there's some big players that are looking for these battery metals in the exact same location. So building that resume, further drilling, better results, a lot of good things could happen. Now remember this, Alaska Energy Metals does hold a significant amount of critical battery metals and precious platinum group metals within the Nikolai project. All previous drill results have shown inferred and, more importantly, indicated mineral resources that affirm this claim. That's the important part. The upcoming summer drilling will further bolster that with additional indicated resources. Alaska Energy Metals presents the potential for a high-grade discovery and offers a unique opportunity to invest in an early-stage nickel mining company right here in the United States. All right, thank you very much to Alaska Energy Metals and to all of you for watching today's video. Very curious to know what you think about the direction of the gold price, whether or not any of the upcoming political elections are going to play into that too. I'd be curious to know your thoughts on which way the price will go depending on the outcome. Now, don't forget to check out the video description section today for links to Alaska Energy Metals and some other links that you may find beneficial. Remember to conduct your own research and determine whether small cap mining and exploration companies do fit your overall financial strategy. All right, thank you everybody. I really appreciate you being here. Until next time, keep stacking, my friends.
Thank you for watching our video. I hope you subscribe to our YouTube channel.